Well, I want to welcome you to AIS, which is Accounting Information Systems. And it's a very interesting area to be in. I had to choose when I was in my master's program what area of interest I had, and this was my area of interest. Um, it's just fascinating to me how different businesses accomplish their goals. And without AIS, I really don't believe they could accomplish those goals. In the first place, they wouldn't be able to tell if they have met the goals or not without an AIS. They would not be able to set the goals without an AIS, and they wouldn't be able to function in a way that would let them accomplish their goals without AIS. So I want you to get out of this particular PowerPoint how essential AIS is to a business. It's not just that the accounting is over there on the side doing something, doing its own thing. It's that AIS and accounting flows throughout an organization. And I want you to get that perspective and understand that perspective. So our learning objectives for this particular PowerPoint is to know what AIS is. And we'll talk about that in some great detail because all your textbooks that you could have had for this class, they would all come up with definitions. And I have a slide that goes through those. And none of the definitions could really capture what AIS is. So when I say what is AIS, I'm thinking that when you express yourself to answer this question, you are going to come up with a kind of an essay as to what you believe it is, because it's not something that we could put precisely in bullet points. What we're going to say about AIS is we're going to say that it functions in a certain way that creates an environment where it can be supportive of the function for the enterprise. And that's our approach. We aren't going to go in and we aren't going to list these things in bullet points that are going to say, if you don't have these things, you don't have an AIS. We are going to look at it more as a function. What functions does it perform? And then we're going to talk about who it serves. And then the third one, why is it necessary to business or enterprise? I use the word enterprise because enterprise is a bigger perspective than business. Business is usually thought of as a for-profit organization, and you have to understand that non-profits, you understand that government entities, um, I think wherever you look and there is a group of individuals working for a cause, you are going to have AIS. And that more specifically aligns with the term enterprise than anything else. And then 4, how do you know if you have a good AIS? Why is 4 important? Because if you don't know when you have a good AIS, you can't really audit it. You can't perform the internal audit or the external audit functions. So in accounting, you're expected to know external auditing, and you would be tested on it on a CPA exam. How can you audit something? That is to say, is it functioning well? Is it not functioning well? How can you get that opinion about something if you don't know what good is? So we have to learn what good AIS is, and we have to learn the principles that guide us, that tell us it looks like we have a good AIS. And so these topics that I'm talking about today, we're going to return to throughout the semester. An accounting system, then, an AIS. I said we are going to approach the definition from a functional perspective. It needs to support external financial reporting. And you know this as applying GAAP and creating financial statements. And if you're a publicly traded company, you're going to publish those statements. They're going to go through to the SEC. But because we're talking about an enterprise, we're also talking about state governments, we're talking about nonprofits, and we're talking about other entities that have reporting that's done outside of their organization. And two, we have internal reporting. And some of you are going to say, well, so internal reporting and the third one, decision making by management, would be the same. And I'm going to say no, because when you do internal reporting here, you're talking about reporting as to whether you are on budget or not. You're talking about reporting that tells us whether we have variance, favorable or unfavorable variances overall in what we are doing. So the internal reporting, it's reports that are filed, that are completed in most organizations, successful enterprises, have a packet that they do of internal reporting, and it just gauges where you are. And then the third one is decision making. You can use, management may use the internal reporting for their decision making, but they also need additional information that they might need for specific questions they need to have answered. And they need to have an AIS that's going to help them answer those questions, that's going to help them make decisions. And then day-to-day operations is a lot of what we'll be doing this semester, because we will be talking about this, and the term for that is going to be transaction processing. And transaction processing is the multitude of journal entries, if you will, that are coming in from outside, and our dealings with outsiders and their dealings with us, that create all these journal entries that occur. And we will talk more and more about the day-to-day operations, and it'll comprise a lot of the work which we are going to do within that SUA packet. And then on 4, we are going to talk about the AIS as a communication system. It's a communication system. And we'll be talking about data, we'll be talking about information. And so when we think about AIS, communication is a big part of it. So cut off a little bit of this top slide, but I'm going to say in a little of the bottom here to create this voiceover. But one approach to viewing an accounting system is to think of it with the accounting cycle. And that's probably what you might have thought when you started enrolling in this class. Or you may have thought that it's an IT class. And neither one of those is a complete perspective of what we are talking about when we are talking about AIS. If you look at the Aaron System Understanding Aid, this is the SUA is what I'll refer to it as. You have transactions happening. So in that, we're going to talk about transactions. This is the day-to-day operations of a previous slide. We're going to prepare documents. Documents are important. You're going to learn that if you do not have a document, my expression for that is it didn't happen. You have to have a document. We'll talk about documents. They don't have to be pieces of paper. In the SUA, they use pieces of paper. But today's world, we don't have pieces of paper, and that's fine. We still have a document. We have journals, we have ledgers, and then we prepare unadjusted trial balances. We have adjusting entries we do. We prepare what we call an adjusted trial balance. We prepare financials, closing entries, and we do this process over and over again. And some people look at this and they think, well, that's an AIS. And this is just one part of an AIS, because when you do this, you support external reporting, and to a certain extent, you also are going to support management decision making, and you're also going to be supporting some of internal reporting. But it's not the complete picture, is it? It doesn't cover all of it, because in this you're not talking about communication that's associated with the transaction. So we have to broaden our perspective, and we'll be using the accounting cycle in your SUA packet, but you're going to see when you work through it that there's other dimensions to it, and you have to bring in those other dimensions. It's very important. I said the other textbooks that I'd looked at were incomplete, so I'm going to talk about these so you have an understanding, better understanding of what AIS is. One textbook was this Turner Weikenant textbook that I looked at. It's a very popular textbook, but it uses that approach that's really from the previous slide. It says a system has to capture, record, process, and report accounting information. So you're thinking like an accountant. You're thinking about doing your journal entries and all of that. That's a bit too narrow because an AIS has to convey so much more than accounting information. The second one is talking about the players. It's talking about what you have in an AIS. It says you've got resources like people and equipment. And then you have the need to transform data into information. But what it fails to see is that it is really a system that needs to exist within this enterprise. It's a system. It's a way of doing things that has to exist. A third one is very similar to the second one, and this BSN textbook says it's a collection of procedures. So now they're talking about procedures. It's procedures. It's things you do. No, it's still not talking about it as being a system or a way of doing things. And the last one, and I used this textbook for some semesters. So in your PowerPoints, you're going to see reference to Hall. You're going to see reference to your textbook. Well, it's because I was using the Hall textbook there. The Hall says it talks about procedures, and it does seem to say there's a system, and it does talk about the users, and I like that approach. But the problem that is a fundamental problem with this textbook, it says we need to think about AIS, accounting information systems, and management information systems as separate. And my point to the right here is that for most enterprises, and that is the enterprises that are really run well, and we'll return to this concept later on, the AIS and the MIS are interrelated. So a good functioning AIS has to be a part of the total information technology perspective of the entire enterprise. You can't take accounting out and put accounting in a little packet over there and say this is the accounting. And for your purposes also, you need to stop thinking of yourself as an accountant that's over there in a corner counting the beans or doing the journal entries or whatever, because accounting has to exist throughout an organization, throughout the enterprise. And because it's throughout, when you look at the information technology, when you look at management information, which exists in so many dimensions and so many ways and so many parts of a enterprise, you cannot look at it as compartmentalized. The compartmentalized approach actually goes against the fundamental principles, COBIT principles, which we'll talk about later, of IT. So you can't think of AIS as standalone. AIS is essential. AIS exists throughout an enterprise. So it supports the external reporting, supports internal reporting, helps people make decisions, And this is day-to-day operations, but also it's the operations at the way in which management functions at upper levels. And it communicates, and that's what this information flow is. It's a communication process. So AIS has to help the business communicate. It's very important there. Current environment AIS functions as a part of the entire information network of an enterprise. So some more points about this perspective I want to drive home. It is not standalone. We said that it has to integrate or has to be a part of the total information of that enterprise, but also it's going to communicate with all these sub-modules or uh, uh, areas of the enterprise. It provides input, it also provides output. And so I want you to think of it as a communication flow, a part of the communication flow throughout. It needs to be dynamic. So if we change our operations for in some way, then the AIS is going to change. One of my easiest examples for us to uh, think about is to think about a business that was face to face. In recent times, we have seen retailers recognize that they have to change the way they're doing their operations to survive. The restaurants, if you couldn't go in and dine in a restaurant, or there were considerable barriers to you going in and dining in a restaurant, for that restaurant to survive, they had to come up with ways to generate revenue. And one was takeout business or delivering items to your car. Well, they had to come up with a new way then to handle their customers. They had to come up with a new way for the customers to communicate that they wanted to buy the food. They had to come up with a new way to communicate to say that the customer is there and they're ready for us to take the food out to them. This is a change in operations. And when we change the operations, we have to change the AIS. And we had to change it in a way in which, well, now there's more communication by phone. So whereas in previous, the customer would come in and make their purchase, go to the checkout and with their items, and they'd be scanned and they'd leave, or they would go to the counter in the case of a restaurant and they would order, or the waiter would come to the table and take the order. Now the customer is using the phone. They're using an app in some instances, and they're placing an order, and the communication is that way. Can you see how AIS has had to change? And it's had to change because AIS exists in all enterprises, even the restaurant, which is a corner. I call it a mom and pop restaurant because it's sometimes family owned. Uh, it had to change. This is the dynamic nature of AIS. If the business changes, AIS changes. And along those lines, it's driven by the business process. And we'll talk about what business processes are. But whatever changes in operations or changes because the user needs change, then business changes, then AIS changes. It has to support, as we said, day-to-day operations decision making. We'll talk about stewardship in another PowerPoint. This is the oversight, and when we talk about this, we're talking about the term corporate governance, and we'll discuss that. In the old Hall textbook, it divided the AIS into really 3 or 4 perspectives. And I will return to this, and this is, if you want to star or highlight something that's important, this is important. Transaction processing. This is day-to-day operations. This is when you have vendors, the people you're buying from, or your customers who you're selling to. You have other buyers. You have anyone who you're dealing with in business transactions. You have a transaction processing system. All of you are a part of transaction processing systems. You may not have known that until this point in time, but you are. When you make a purchase, you become a part of that. When you, if you work for an organization and you work in retail, or if you work at a bank, or most of your jobs, you're involved in a transaction processing system because you're dealing with people and you're processing the transactions of the enterprise. Their second one is sometimes divided into two: general ledger work, and the general ledger is taking the things that were from transactions and putting them in your general ledger. And then the third one, which is sometimes split here, is financial reporting system. Two is really the accounting cycle we're talking about from the previous slide. And the reason why we split general ledger and financial reporting is because financial reporting is where you send it out. You send it out to external parties. When you do general ledger work is also internal work. Okay? So to the point at which you go out, that is the financial reporting system. A lot of times, though, we combine the two together. I really do not have an issue whether you combine GL, General Ledger, with FRS and say it's one big thing or not. I do need you to realize that transaction processing, though, is separate from that. Because transaction processing, you're talking about communicating on a day-to-day basis with outside parties, and you're talking about really facilitating the transactions that get recorded in the general ledger. So I want you to see that. Whether you see general ledger and financial reporting as separate or not, again, some do, some don't. The third one is a management reporting system. Now, this MRS has really separate areas within it as well, if we want to be technical about it, because it is a part of the decision-making process there that happens in MRS. So answering questions, right? So your AIS needs to answer management questions, but it also needs to be able to compile reports. So we had on a previous slide that there were two things, and I said you could see these as being separate, but they are somewhat related. They both get into this. And I use these acronyms quite a lot. So TPS is transaction processing, or I might just say TP, and then GL or FRS, and then MRS or MISS, right? That's a management reporting system. So when we look at information, and we'll define information in a minute, we can see that this pyramid is really talking about the volumes of information. And information from in day-to-day operations is just, the volume of it is great. My best example so far I've been able to come up with is to think about Walmart. When you're in Walmart and you go in, you make a purchase, you go through the checkout lines. One of the things everyone has to choose when they get to the checkout line is which checkout line I go through. And of course, I tend to get the longest one. I make the wrong choice. I think I should be in this queue and I get in that queue. And well, the point I'm making here is there's so many people in line at the same time I'm in line. So that means all those people are going through, and all those people are transactions. And within each transaction, there's multitudes of items. I sometimes see people in Walmart that have their carts absolutely overflowing with items. And to think about that, all those items are being scanned. And all of those little things are little bits of, we'll get into bits and bytes and all that later, but little bits of information, right, that are going through the system. So you start thinking about all the customers that are in line when you're in line. You start thinking about all the Walmart stores. And I'm not talking about Walmart stores in your community where you have neighborhood markets or where you have the big box version. I'm talking about thinking about all those that are in your state. I'm talking about thinking about all those that are in the nation. I'm thinking about all those in the world. I was at a Walmart in China when I visited China. Interesting, very interesting about that. But all those transactions, so the bottom one is transaction processing, all of that has to go through the system. And so this pyramid is actually even more exaggerated, should be more exaggerated than it is in this image because there's so much. But above that, you have the people who manage operations. They want to know if there's a bottleneck. They want to know if there's a problem. They want to know maybe if there's a particular item that there's a shortage of that they need to maybe find new vendors to provide. That sort of thing. But do they want to know what I personally have in my cart? No. And so the information needs of these become narrower and narrower and narrower till you get to the top. And when you get to the top, you're talking about the CFO, and those individuals could care less about what I have in my cart. They want to know how to make the business profitable. They want to know in what new areas they need to take the company. So what I have in my cart is not really relevant to them. You notice the arrows going out. This is talking about the internal and external people that are a part of this. So you're dealing with suppliers, you're dealing with customers, you're dealing with others as well that aren't in here. You have the stakeholders at the top. So you look at this and you realize that the information environment has interface with outsiders. You realize the volume that exists. And then we're going to talk a little bit about data versus information and how those needs will be different from the people at the top in top management versus the day-to-day operation. An important byproduct, which is really an asset, is the creation of databases. We'll talk about databases and what databases are versus flat files. So we do have to talk about IT this semester. The SUA, the Systems Understanding Aid, is not IT. It is still quite valuable because the concepts that it enforces in it are going to be of importance to you. They have, the volume of data we're talking about, all those transactions from Walmart. It has to be managed. We have to have a means to retrieve certain bits of parts of the information. If a customer asks a question about their particular transaction, we have to have a way to pull that transaction out of all the other transactions that are there. We have to figure out how do we save it, how do we organize it so it can be retrieved. There's another aspect of it that I have down below, which is security, because you would not want every individual to have access to all the information in it. For example, your employee records, would you want everyone to know your social security number? And that's, we wouldn't want that. And your customers have a expectation that you do not have a system where people can, outside businesses or governments or anyone outside your enterprise can come in and access the customer records that may be quite personal. It might have information in there that are quite personal. And you all, I'm sure, have heard of the hacking, and Target was hacked, and their Red program was hacked into, and the personal information of the customers was put out there. This sort of thing is a problem. So you have to have a way to limit the access, And we're going to talk also about schemata. And schemata is a view that exists. So the database may contain a whole bunch of information, and the information is connected in a quite efficient way, an effective way to help AIS function, but it has to be limited in where that information goes, and the schemata has to do with the viewpoint of the particular person who is using the AIS. So we limit what any one individual sees, and this is a part of security, as well as a part of security that says this is our proprietary information. We are not letting it out to outsiders, and we would call that hacking and the security of customer records and sensitive data. Now, while I was talking about the database arrangement, I'm going to introduce us to this, which we will return to, but we need to start thinking about a general model which creates a hierarchy of data within the AIS. The best way I have of explaining this is to think about an Excel file. If I was right in front of you today, I would draw a picture and it would be an Excel worksheet. And I would say that across the top of it, there are columns, and you use columns in Excel when you're looking at a worksheet. And let us say that this particular worksheet is about accounts receivable. On the first column, I would have the customer's account number. On the second column, I would have their name. The third column, their address. I might have their balance. I might have their credit limit. There might be other information that I would want in there for my accounts receivable. And you know this probably as thinking of it from a general ledger perspective. That line might be a subsidiary ledger for a particular customer, right? A subsidiary accounts receivable, because that current balance of the account is what you would have in that subsidiary ledger for that particular account, customer account. So now I think you're kind of seeing here that how everything is tied together, because I just mentioned it was general ledger, but you see general ledger, would you need name and address and all that other in the credit limit in a general ledger account, and you're going to say no. So I think you're kind of seeing how AIS has to tie everything together. Well, this line is a particular customer, but the column, so the row is the customer, and the column is the attribute. That's the word to know, attribute. And a collection of those creates records. And you could say my accounts receivable records, and you would have a listing of all of those. And so when you look at this particular record and you combine all those records as they do when they give you that blue arrow down, it is a file. It's a file, okay? So think of the file as the worksheet, right? That is just a part of it. If you had a multitude of these things, not looking, say, at the account receivable, but looking at what the customer ordered, a particular order from a particular customer, that would be a part of another record, wouldn't it? And when we have a database, we have a way of combining all these things. So yes, I have that customer, but I have a way of combining that with what they actually purchased. All right, but I wanted you to understand the terms we're using. The record is the line in your Excel spreadsheet. The attributes are the columns. The whole spreadsheet, the worksheet, becomes the file. The other thing I want you to start seeing, there is a key. What is a key? A key is a way to get at all this information about you, the customer. Have you ever called in to a business and you have a problem with your account? You got a statement and the statement says that you owe, but you know you wrote a check, the check was sent in. Or maybe you have looked at your bank statement and you can see on your bank statement that your payment was deducted from your account at the bank, and you have a question about that. Well, you call to the company, and the company is going to ask you something. And more likely than not, they're going to ask you for your account number. And they ask you for the account number. The person you're talking to will type that number in, and that number goes in, and when it goes in, and it goes to this particular line of the accounts receivable records, and it will find you. And if you're asking about a payment, then it can go also to the payment and the payment file. So the payment files, it will go into there, and it'll be able to look and see if there is for you that payment. So this is the way it kind of all works. This is the behind the scene AIS and what is happening there within that company when you call in. Now, some companies don't use your account number. I'm seeing more and more frequently they're using some other numbers. Any of you have an idea? I hope some of you thought of your cell phone number, because cell phone numbers are increasingly being used as a way to locate customer records. The problem with that is if you do not always have that cell, you change your cell number, then that becomes a problem, because then all these databases have an incorrect key. So when they use cell numbers, they often have two keys. They often have also your last name. So you can go into a store and you're checking out, and they have some sort of a customer appreciation arrangement, and you may have a little card you could use and you could scan it, such as at Ron's, for example, the grocery store. Oftentimes they'll say, "What is your cell number?" And you put it, and they'll put it in, and they'll find you. And oftentimes, if they don't have that, they'll ask you for your name, and they'll put it in and look for you. So those are keys. Those are keys. We'll return to this when we start talking about database, but this is your introduction to how all this is going to function. The difference between data and information, I said we'd get to that, is that some of you are going to say data, well, that's small things, and information is the big picture. And this is kind of a misconception, because something that is data to one person can be information to another. Okay? So what data is and what information is, the only real distinction here is that information is a thing that causes you to act. And sometimes we also say information is relevant. So in other words, information matters. Information matters. And the whole description here of what information is and what creates value when you have information is that it's relevant. It is something you need, and that is implied up here because it says it causes the user of it to act. So if you tell me something that's not relevant to me, I'm going to say that's data, because it may have value to someone else, it doesn't have value to me, it's not relevant. And you can provide me with something and you can say that it is information, but it might be information that is 2 years old. That doesn't really have so much value to me, does it? And then on 3, we're talking about accuracy. Accuracy is something that I want you to think about as a pendulum. We're not saying that it is completely accurate. We're saying it is reasonable. It is reasonably accurate. In other words, I can rely upon it to come to some conclusions or to act, but it isn't to the point where I would say to the 100th digit or whatever, I can come up with exactly a number, or I can say with 100% um, satisfaction that I will be always accurate. It is close. It is close enough that it can drive my decision. And I would not be misled if I looked at this information and used it to act. It has to be complete. And so it doesn't tell you part of the story. For example, if I was looking at costs and I wanted to know the total cost of something, and the information left out a certain important perspective. Some of you who take financial reporting know the importance of the time value of money concept, right? So what if someone created a sort of a spreadsheet and gave you costs, but did not bring into it the fact that these costs would be occurring in the future and not today, or that you're going to have to come up with this amount of cash today instead of coming up with that cash over a period of time. They're going to require you to pay immediately. Well, that would be a big part of your story that's being left out, and I might act in a different way if I had that information, wouldn't I? So the completeness of information is important. Summarization is sometimes one of the distinctions that people use when they talk about data versus information. They say that data is a little packet and information is taking those packets and putting it together in a way that is informative and it is summarized. This summarization really becomes important when you're talking at individuals that are at the top of the company, because they're taking all these, my previous example is all those Walmart transactions that somehow get compiled and summarized in a way that can tell the CEO or CFO about what is happening in the business. That's the summarization feature. But this is the part that's really rather important. When you're looking at transaction processing, you're having individuals that are handling the transactions, dealing with transactions that a particular customer, say, is questioning. That is not summarized. That is detailed. So if I want to know what's happened to my Amazon order, it's not helpful if Amazon were to tell me we had 1 billion in sales on that day. Yes, that is information to someone, right? And it's summarized information to someone, but from my particular perspective as a user, it is not important, right? So I can't say that's information to me. What would be information to me is that it could tell me what happened to my order and why I did not receive it on time. You know, we get a little upset when we don't get our orders on time, right? You said I'd have it today. I don't have it today. That's information to me. And when you look at the pyramid, where did I fit in that pyramid? In that pyramid, I was at the bottom. Now, from the perspective of someone at the top, they're going to say, my question is data. It's not information. So from the perspective of the person at the top, doesn't have relevance. It doesn't even fit the completeness perspective of that person at the top, because they want to know about all the sales. So I hope you're getting what I'm trying to convey here, that the difference between data and information has to do with the perspective of that particular user. And to make it valuable, even once we establish that it's information, that information has to have certain dimensions. It has to fulfill certain items, including relevancy, timeliness, accuracy, completeness. And if you're at the top, you have definite need for summarization. Top is missed out here. What additional values should it have? It should say what really happened, the actual occurrence. Did it happen? It should reflect the fact that there is an item. And when you think about this, I want you to think about inventory. If a person is looking at an inventory record and the inventory record says that at this particular store there are 10 items out there, I find this becomes increasingly important. I go online and I look and I'm trying to find a thing that I need, and it says it's available at this store, but it's not available at this store. So if I'm buying something from Lowe's, I may go to that store versus the other store, because when I look on the record online, it tells me as a customer that they have it. So if this is wrong, I'm going to go to the wrong store, right? And I'm not going to be happy. And the value of the items, this is closely related also to accuracy. And the value, when we look at this, if we're looking at it from the perspective of the company, we're talking about the value of their inventory. When you are an outsider and you're talking about this and you're looking at value, maybe you're looking at price when you're looking at that. Rights and obligations have to do with the perspective of the company. Do we owe it? Do we not owe it? Cutoff is something that becomes important because it becomes important in financial reporting as to which period of time that particular sale happened. And then classification and understandability is something that is important from several different perspectives. If you look at it from preparing your financials, it becomes important. You're talking about a current versus a non-current liability, for example. If you're talking about understandability in terms of dealing with a customer, which is transaction processing. When you describe something online, that particular item, it needs to have an understandability feature to it so that if a customer looks at it online, they understand what the product is and what the product does. So you can see, you're beginning to see how broad AIS is and how many different facets and how much there is to think about when you think about AIS. I think about AIS and I'm going to say what is the most important about all these dimensions, or all about all these, if you want to say, attributes, features of AIS that's most important. To me, I think it has to be truthful. That goes back to understanding. It goes back to transparency, so that the user, if they're using the system, they look at it and they can have a belief that what the system says is true. This is because it's about information. Can we believe the information? If we believe the information, we are going to act with that information, because that's the definition of information. Are we acting in the right way? And this is so important because we are relying on it. That's the second part. It has to be reliable. We're relying on it. If you have records and the records aren't updated and you rely upon the old records, which goes back to the timeliness of it, this is a problem. This is a problem because you think you're doing the right thing, but you're not doing the right thing. The functional segmentation, okay? I'm going to talk about it. I'm going to say AIS has to be integrated. But I also think this is very important to you as you go through our curriculum and you come out at the other end and you get a job. I mentioned previously, accounting is not off in an area, in a room that does not interact with others. And this is the blue highlighted here. This is a business organization, and the blue highlighted, you can see what it all is going to be dealing with, because you see under marketing, you see sales in blue. Under distribution, you see has warehouse and shipping. Under finance, you see credit. And then in the accounting, this is a general ledger accounting. You have inventory, you have accounts receivable, you have billing, and you have general ledger. So I'm arguing that this is general ledger financial reporting accounting. And then over IT, you have data processing, and this means their transaction processing is what they're talking about. So across the top of it, you have these functioning, and they're calling them segments of a business organization. And within each one of these segments, you have functions that are going on. In materials management, you have individuals who are working in purchasing. You have individuals who are receiving, which means the materials are coming into the company and they're recording it. You have the stores, and the stores also are a part of this materials management area. What I want you to see is if we just look at one type of transaction, and you guessed it, it's a sales transaction. The sale itself affects marketing, distribution, finance, and IT in addition to accounting. And when you start doing this and you start talking about other types of transactions, such as buying something from a vendor, if you buy something from a vendor, I'm sure you have this involved. It will also affect production. It will affect perhaps personnel, because personnel are involved in production. It may involve finance, because we're talking about cash disbursement associated with that particular purchase. It will affect payroll here, and it will also affect data processing. So we could go through and we could think about all the transactions that are happening in a company, and we could see all the different functioning segments of a company that are involved. Now, because they're all involved in the process, what all also are they going to be involved in? If I was in class, someone would say AIS, and that's true. So AIS permeates throughout the business organization. So when we had that previous perspective that said AIS was some standalone thing, it was so wrong, because AIS is everywhere. It's throughout. It's throughout the organization. And it has to be something that all these particular users from all these particular functioning areas can use. Now, their particular view of it is going to be different. Their view is going to reflect what they're doing on their job. But the system has to serve all these within the firm. So we have to have the ability to capture data. And we're going to call it data because it becomes information only when the user needs it, right? And there are documents, okay? And we'll talk more about documents. And it has to be able to create the documents. It has to be able to store the documents, do something with those documents. It has to have internal control. I'm not going to talk about what internal control is today. We're going to have a separate module on internal controls. It is a very important part of AIS. It has to have a way to classify, summarize, consolidate, communicate. I say these can be combined, because when you're talking about financial reporting and you're creating reports for external users, you are generating a report that is the culmination of this classification, summarization, consolidation process, and we call all that GAAP, right? We call it GAAP, the way we combine to create the financial reports. However, it need not be combined. need not be combined, and you might also see that as well. Talked about this previously when we're talking about the management perspective and management decision making. So in our review of this, I hope we have learned a lot from this almost an hour of your time I've taken up here. But you know what an AIS is. And again, it's not something you can put into one sentence, is it? You have to think about what it does, who it serves, right? And that is one perspective of it. You have to think about it, and that's two, right? You have to think about it as an integrated part of the enterprise. It's not separate, it's integrated. You see that it has an IT dimension to it. That today it involves databases. You see that it involves transactions. You see that it is so important to a business profitability, existence, because if you don't have an AIS, you can't have transactions. If you don't have a good AIS, and we talked about all that, about a good AIS and what makes for good information. If you don't have a good AIS, you're not going to have customers that come back to make purchases from you. They want to be sure if they order from you, it's going to be at their door in good condition. It's going to be the thing they ordered. And yeah, a good AIS needs to support all the transactions that are happening. And it is necessary to the business, or the broader perspectives is the enterprise, because you look across it and you look at all that's going on in that particular enterprise, and you see how that AIS is permeating throughout it. And all the jobs that are being done couldn't be done without AIS. So if anyone tells you that your job as an accountant is just a minor part of the business, you have to take on a new perspective. You have to realize how essential you are. The accountant is essential. If you don't have this AIS, you really can't have the enterprise. Review questions now. Which is not a part of the accounting information system? Well, it's best if we really talk about it and you memorize your acronyms. We said TPS, we said GL, we said FRS, and we said MRS. So the one that does not fit is B, expert system. Who are the users of information from the subsystems? What sort of information might they need? Transaction processing. You can give some examples of that. It might be a sales transaction. It might be a purchase transaction. Who are the users? Those users are the parties to those transactions. In general ledger and financial reporting, what sort of information do they need? Who are the people that are involved here? And when you do financial reporting, you're talking about creating reports that are going out, and the users are going to be the readers of the financial reports. A management reporting system, what's it going to do? What sort of information might you need for that? In management reporting systems, that tends to be an information that tends to classify, but we have to be careful here, because think of a manufacturing company, a manufacturing plant. You could have a controller of a particular manufacturing plant. They want to know what's happening with their production run on that particular day. They want to know how fast items are going through. They want to know how resources are being used. So the point in this question is I want you to start thinking about the informational needs that are associated with the different parts of our AIS. Now, talking about data attributes. Now, this, I want you to go back, and when I say attributes, I'm not talking about quality here of data. I'm saying when you look at the columns in a worksheet, what are the things you might see in the columns if you were to look at a file, say, of accounts payable records? So we had accounts receivable listings. This is an accounts payable listing. What would you see in there? And what are the different columns you might expect to see if you created a worksheet of that? What about inventory? What are the things you might see there? What about sales orders? Now, purchase orders are orders to buy from outsiders. We're buying materials. What would you see there? What about cash receipts? And I say checks. So you're having checks coming in from customers. Employee payroll earnings records. This would be something that you can go in and you can see from your employer your year-to-date totals. What's in your year-to-date totals? What is in that line that goes across? And the other thing is to pick out what you think would be a primary key. Our example here was you're an account receivable. They had not processed your payment. You're calling in. What are they going to ask you? They're going to ask you for your account number. So when we answer this question and we have primary keys for these records, you need to understand that you could have multiple primary keys, right? You could, in your response, a primary key is the one that is the number one that's used, but you could say a particular organization might have different primary keys. There might be, in other words, good answers, multiple good answers when you answer the primary key question. So let's look at the solutions and we'll talk our way through this. Accounts payable records. If it's arranged by invoice, it would be invoice number. I happen to think when we look at accounts payable records, and you're going to see this when we do our systems understanding aid work, that is probably the account holder's personal number. Okay? And I said up here, this is my warning within the slide, that the solutions may not be complete because you can think of other things. I would probably not say invoice number here. I would probably say that particular vendor's identification number, which is the second one. For inventory, those of you who work in retail, you know the word SKU. SKU. You hear it all the time. What's the SKU on that? Or what's the barcode on that? So when we talk about inventory, that tends to be the thing we use. When we talk about a sales order record, this is when a customer has a particular order. We're talking about one order that they've ordered something. You do this, you go online, you order from Amazon, maybe it's eBay, maybe you deal directly with Target or whoever, Walmart, or you're ordering online something that's going to be delivered to you. There's a sales order for that. So it's probably arranged according to sales order. And then when you order also, and you are a business who is making an order, you have an order in your system. Now, a difference here between a customer order and a purchase order is the perspective. But I also want to think here, because when we order from companies as individuals, we don't assign an order to that particular thing we're buying. Instead, the seller assigns an order to it, don't they? So in this instance, when we say purchase orders to vendors, we're talking about a business. If a business is ordering, they have a purchase order number they use. The other thing I want you to take a moment to look at is these items that are listed out separated by commas. So for inventory, for example, you have what I call the SKU, then you have a description, you have a total on hand, you have a unit cost, you have a sales price. They have an EOQ in there, may or may not have that, and you have a reorder point, may or may not have that. But these things that are listed and separated by columns, those we call what? They're the columns. What do we call these columns? Right. I want you to memorize the columns are called the attributes. What are the lines called? Records. Okay. And a collection of records creates this would be the worksheet, a file. Cash receipts, cash receipt number that's assigned might be the primary key for that. You also might use something that has to do with the customer, and you might be using a customer number because this is going to be a separate line. You also might use the customer's check. Oftentimes, the thing about a primary key is you want it to be something that's not duplicated within the listing within that particular record. So the record of cash receipts, you would not want to see another check from another customer with the same number. That would be a problem. Okay. So, and the amount received, you might not want to use that because the amounts might duplicate within your records. So the dates for sure would duplicate because you'd probably have cash receipts from different customers coming in on the same day. So you have to think about the uniqueness when you are looking for that primary key. On employee payroll earnings, this is an interesting one, and I can drive home a few points that we've made also when we were going through this module. One is the employee identification number. What if that is the Social Security number? Is this good? Is this bad? And I'm going to say it's not good. It used to be the payroll earnings records were kept by Social Security number. However, if this is a primary key, what's going to happen if you call in and you want to know something that's showing up on your payroll report? As an employee, they're going to ask you, what is your Social Security number? You have just given your Social Security number out in a communications. People in the room with you can hear it. People at the other end can hear it, including the employee who is looking up the record and trying to answer your question. So employee identification numbers used to be Social Security numbers. Now you have another number. If you're in GUS here and you're working in GUS, you as a student have a number. I have a number too. It has a number of zeros before it, and then it starts. It is not my Social Security number. Students are always amazed when I tell them, in the past, when I went to college, what was my student number? It was my Social Security number. Can you imagine that? And so on my student ID, I had my Social Security number. And when I went to another school, they didn't have it that way. But when I started and I was going to my first school, they had my Social Security number on my student ID. Now, just how wrong is that, right? So this is where we're talking about security. The employee payroll earnings record has to have some link and include your Social Security number. Why does it have to have it there? Because at the end of the year, they're going to report to the IRS what your total amount of withholding was for a federal income tax. They're going to report to the states how much your amount that they withheld for state income tax was. And you all know this because if you got a refund in your taxes last year, you had to put in your taxes what you paid in and what you should have owed and the calculation, right? So you have that showing up in your statement that you get every year from your business. So it has to have a link to it, but the view of it would be different depending upon who's looking at it. And Social Security would not be something that most people who are accessing your payroll earnings records could see. Has to be there. It's important that it's there. And it's important that there is a linkage which exists between your employee identification number, the primary key here, and that Social Security number. so that we can do the filings that are required at the end of the year and so that you can get your tax refund. So that's the bit I'll talk about there relating to security and how you handle security for information that is contained within within individual records.